I won't stop till I hear him say,
This document, literally from the BIS, says that retail investors chase prices. Okay, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's breakdown, we're going to go over some interesting fundamentals. We're going to be talking about the cryptocurrency market space. I'm going to share some articles with you all, breaking down what's going on in the crypto market. If you all enjoy video breakdowns like this, smash that thumbs up button, subscribe to the channel. We do appreciate the love and the support. I'll start off by just saying I hope everybody's having an amazing weekend. This past previous week, because this video is going to be dropping on Friday, we had kind of a neutral reaction to the FOMC minutes. Crypto, in a way, was kind of weighed down by the release of a somewhat hawkish Federal Reserve Open Market Committee. The FOMC in minutes showed that the Federal Reserve policymakers agreed more rate hikes would be needed to achieve inflation objectives, and even that a few participants trend towards raising interest rates by 50 basis points. Now, I've told you guys in previous video breakdowns that I have a firm belief that some of that is already priced into the market. So if you haven't watched previous video breakdowns on the channel, make sure that you're up to date and you go back and check some of those out. I showed you all via price action that last time the DXY was above the psychological level, the historical level of the 103.800, that crypto actually reacted positively to that. And you guys can see right now, again, on the DXY, that prices are again above the historical level of the 103.800 that we've been talking about for quite some time on this channel. So with that being said, in my personal perspective, because we are expecting the rate hike cycle to continue from the Federal Reserve, however, we're not seeing a negative impact in the crypto market from that. I do believe that that's already being priced in by major banking institutions. And in my perspective, one of the only things that could drive prices lower in the crypto market is, again, some type of black swan event that nobody can necessarily predict, or some type of crypto going bust or exchange going bust, or some type of regulation that hinders retail investors from entering this space, or maybe even institutional adoption. So look out for that. Now, this was another interesting fundamental that came out going over the strength of the US dollar. And I want everybody to pay attention because of this global macro financial shift that we're currently experiencing. In previous video breakdowns, if you haven't checked out our financial crisis playlist series on the YouTube channel, make sure that you go check that out. But we've talked about the United States dollar shifting hands in the global reserve currency. Now, obviously, of course, that shift is in the works and it's going to take some time, but the United States dollar right now still holds global reserve currency status. So when there are geopolitical woes like this, in the case of this fundamental, and I'll go over it in 1 second, we will see investors flock to the dollar, right? So this article reads, the safe haven US dollar also found additional legs on its way higher, courtesy of the looming geopolitical tensions surrounding the United States and China over Russia. In defense, a Chinese foreign minister spokesman Wang said on Wednesday, it is a known fact that NATO countries, including the US, are the biggest sources of weaponry for the battlefield in Ukraine. If they keep claiming that China may be supplying weapons to Russia, meanwhile, U.S. officials announced late Wednesday that Biden administration is considering releasing intelligence to believe shows that China is weighing whether to supply weapons to support Russia's war in Ukraine. So that was an interesting fundamental coming out. Surprisingly enough, it came out right after this February 18th release of the Vice President, Kamala Harris, saying that the U.S. has officially declared that Russia has committed crimes against humanity in Ukraine. So this massive geopolitical tension that we're seeing between Ukraine, the United States, China, and Russia, obviously, of course, is going to have a massive effect on the strength or the weakness of the United States dollar. So that, again, as a retail investor, is something for you all to be paying attention to. But let's continue down the interesting fundamentals that have just come out recently. This one was probably the most interesting, supporting some things that we've talked about here on this YouTube channel, especially if you are a follower and have been for quite some time. You know how it is that we trade the markets here, how we approach the market with an open-minded perspective, with sound technical analysis and psychological analysis as to when it is that we're buying price action based off of where banking institutions ball and not chasing the market like retail investors. And instead of being impulsive traders, we are reactive traders here at CYPRX. So this article, in correlation with that theory and that ideology, that retail investors majority of the time are chasing green candlesticks, supported that thesis. Check this out. It says, and by the way, this is coming from the Bank of International Settlements. That's the central bank for central bankers. Okay, here's what's driving Bitcoin adoption according to the Bank for International Settlements research. Just to read a couple highlights, it says, in a new bulletin from the Bank of International Settlements, the institution says retail investors pour into Bitcoin after price begins to rise in hopes of chasing high returns. This is literally proving the thesis in some of the methodologies that we teach the students here at CYPRX, is that 95% of retail investors are buying tops. The majority of individuals out there on the YouTube and Twitter space that are always shilling coins and always talking about bullish this, bullish that, they're most likely in the red in their crypto portfolio because they buy tops. They don't have a sound strategy, a sound technical analysis and logical approach to the markets, regardless if they're using fundamentals or not. And they're buying when price has already rallied. All right. It goes on to say the fact that adoption rises in the wake of price increases suggests that users enter the system attracted by high prices and with the expectation that price continues to go up. The BIS says while Bitcoin price increases appeared to be tied more to retail investors entering the crypto market, most of these investors have likely lost money on their holdings for failing to time the market swings. Okay, that sentence was interesting, and it takes me over to the BIS document right here, where it literally says retail investors have chased prices and most have lost money. So I want you all to pay attention to that statement right there from the BIS document. Going over to this tweet that I put out to you all, and I said, the number one reason most retail traders lose, in my opinion, is because they lack independent thought, and instead they think someone else's market decisions will make them successful. The fact still remains that the majority of people neglect their privilege of thinking for themselves and become the victims to a large degree of the faulty thinking of those nearest to them or whom they watch on social media. So if the Bank of International Settlements is telling you that the majority of retail investors buy when price has already surged, putting them at a loss because that's not when the banks buy at bottoms, right? Then you should take it upon yourself to stop watching these influencers that are always just telling you to buy and sell and do this and do that, and generate your own bias. Get a mentor, regardless if it's us here at CYPRX or somebody else that teaches sound fundamentals, sound technical analysis, and a sound psychological approach to give yourself a winning edge in this market. Remember that 95% of retail investors have no idea what it is that they're doing, and the majority of influencers that you're watching don't either. So just take some of those things into consideration. One of the main things that we teach our students is not to be impulsive traders and to be reactive traders. Now, not only do we teach our students how to do that in the form of technical analysis, but also psychological analysis as well, which is something that a lot of people lack in the markets. This document, literally from the BIS, says that retail investors chase prices. So if you find yourself doing that or have done that in the past, take into consideration some of the things that I just talked about in today's video. So let's put that past us. Let's go over some interesting crypto fundamentals that have come out recently. Deutsche Bank successfully finishes trial of tokenized investing platforms. Now, this is a massive step forward, okay? Because for institutional investors to flood into the space, they need a sound place to park their capital, right? And if a major bank is facilitating a tokenized investing platform for digital assets, again, that is a massive step forward in this digital adoption. I want to give you guys a personal experience. I just traveled to the East Coast and I was in the airport at LAX, and I went to go buy my family breakfast. It was probably like 7:30 in the morning. And we get up to the line, I order my food, order my coffee, thinking everything's good. And I pull a wad of cash out of my pocket, and the gentleman looks at me and he's like, yeah, we don't take cash. So you mean to tell me that I can't pay for my food because you don't take a legal form of tender, right? Or legal, right? So hold on, just take a second and think about what I'm saying, okay? They wouldn't accept my money because they say that they only take credit and debit card. There was no sign that says that they don't take cash. In a way, not telling people ahead of time that they can't pay for something with legal tender, right? There's no law right now that says that cash can't be used. So how is it possible that they weren't able to take my money? It's in that simple explanation right there shows you how much control they have, right? Yes, I pull my debit card, of course, out, swipe my card and pay me electronically. But the fact that they have control over how people buy and sell things by just saying, no, you can't use cash. I'm telling you all right now, wake up, ladies and gentlemen, the digital transformation is coming. And as we move along year in and year out, you guys can see this fully taking place. Okay, I don't know how else to wake people up. These are simple fundamentals that you all can go check out yourself. Here's another interesting article from the Daily Huddle. Investing legend Ray Dalio slams Bitcoin and crypto, says digital assets are not a storehold of wealth. He goes on to say in a new interview with Study Billionaires, longtime crypto critic Ray Dalio says the digital asset space receives a disproportionate amount of attention, given its relatively small market cap. Now, a lot of this article is filled with a bunch of fluff, and Ray Dalio, obviously, of course, an outdated investor, in my personal opinion. But down at the bottom, remember I told you guys how they start these articles and how they end them is always the most important thing. It says the founder of asset management firm Bridgewater Associates, which I've shown you in the past video breakdowns, is heavily invested into this crypto adoption, by the way, does acknowledge that he owns a tiny bit of crypto. Hold on, isn't he telling everybody in this article that it has no relevance? Why do you even hold any of it? Anyways, for the experience and the who knows element, right? It literally says right here, the who knows element. So he is curious about the potential price discovery. He also predicts there will be better digital asset currencies in the future, right? They're already existing, ladies and gentlemen. They're already here. And you all can take it upon yourself to go do the research on those utility-driven assets right now and stop listening to the opinions of these outdated individuals that have no idea what's about to hit the market in full force in the next 2 to 5 years. It's going to be insane. And I don't think people understand that. Let me prove to you what I'm saying. Here's another article. It says right here, Bitcoin market cap flips payments giant Visa for the third time. Not the first or the second time, the third time. Now, don't you all remember on my Twitter just the other day, I posted this video right here of the Visa CEO saying that everything will be 100% digital in the future. That is massive, especially surrounding utility-driven assets that are specifically utilized for cross-border payment systems, in my personal opinion, alongside interoperability, right? So check this out real fast. Again, if you don't follow me on Twitter, link is in the description down below, but check this video out again from the Visa CEO.
Do you have to convince them sometimes that these services are safe and effective for them when they might have challenging situations? When you're talking about money, period, trust is a big factor, whether it's digital or cash. One of the things that we believe has to happen with remittances is that we need to move them so that they're 100% digital from the point of somebody initiating it to the person receiving it. That number was only 3%. Were totally digital 5 years ago, and it's only 13% now, meaning at the other 87% of the time, somebody's got to get cash into the cash either comes into somebody or cash is given out at the back end of it. If we can make it all digital, it'll be faster, it'll be more efficient, and it will help create these access at the other end for the receiver. So,
oh man, okay, so right now, we're only 13% digital. That's coming from the Visa card CEO. Can you imagine what the world is going to be like when we reach 100%? 100%. And right now, we're in 2023. People don't understand how early we are into this game right now. It's literally mind-blowing, okay? Let me take your attention back to another fundamental. Hope that you guys like that little tiny video breakdown. That was a gem right there. So goes on to say MasterCard to allow crypto payments and Web3 via USDC settlements. Didn't we all just see a whole massive spike in FUD surrounding stablecoins just the other day, right? The SEC litigations via the stablecoins and whatnot. But MasterCard to allow crypto payments and Web3 via USDC, stablecoins aren't going anywhere, ladies and gentlemen. Embrace regulation. Understand that through regulation, institutional adoption will come. Yes, of course, as retail investors participating in this space early on in the game, we need to make sure that we're protecting ourselves out there by doing research, valuable research, and keeping up with regulations just in case they do try to pull any strings. But the majority of the information that's being pushed out to the general public is to shake you out, to steer you in the wrong direction, while these massive payment systems like Visa and MasterCard go on to onboard their systems to the blockchain, to this digital asset space. Okay, so I'm not going to get into this. This is another fundamental that you all can go and check out yourself. Last but not least, another article from the Daily Huddle goes on to say, Morgan Creek's Mark Yusko forecasts future of crypto exchanges, says the next Bitcoin bull run is inevitable. A couple of highlights from this real fast. Marcusto goes on to say, amid the anticipation for the next Bitcoin bull run, Yusko says many are not ready to see Bitcoin breach the 6-digit mark. I am. I don't know about you all listening, but I definitely am. He goes on to say, a lot of people are starting to look toward the halving early next year. And crypto spring is getting long in the tooth, and we're only a few months away from crypto summer. I saw somebody say, are you ready emotionally for $100,000 Bitcoin? I don't think people are. I really don't think that they are ready to see the next bull cycle. Last but not least, it says, I think that the inevitability of digital assets is stronger than it's ever been. The positive energy around the ecosystem is starting to come back after being suppressed all of 2022. I can firmly agree with that. Like I said, ladies and gentlemen, make sure that you're doing your own research. I attempt to provide you all value in the form of these fundamentals. You guys got to really start to figure out what's going on behind the scenes, how these banking institutions move. They literally provide you documents talking about how we trade here at CYPRX, showing you all that we are putting our money where our mouth is, trying to wake people up. Right in front of your eyes, this is the document from the BIS saying that retail investors chase the market. So if the Bank of International Settlements is telling you, a mentor is telling you, individuals on the retail space are always running around like little chickens with their head cut off. Shouldn't you take it upon yourself to start really digging deep? That's all I'm saying. Wake yourself up, ladies and gentlemen. Blessings to you guys. Hope you guys enjoyed this video breakdown. Smash that thumbs up button if you did. And as always, be cognizant, be aware, and I'll see you guys in the next video breakdown.
I won't stop till I hear him say, la, 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 la.